Let's talk buydowns. I am starting a 3-part video series on mortgage rate buydowns. Watch your email for the entire series and be sure to follow me on YouTube to watch the series there as well. I want to start by explaining there are 2 different types of buydowns. There are permanent buydowns and then there are temporary buydowns. In this video, I'm going to focus on permanent buydowns. A permanent buydown is when the buyer or the seller, on behalf of the buyer, buys down the mortgage interest rate. For example, if today's rate is 6%, the buyer may choose to buy down the mortgage interest rate to 5.5%. It costs money to buy down that mortgage interest rate. We add the buy down cost as a closing cost. The cost of the buy down will be on a per case basis. To give you a quick estimated example, a buyer with great credit score could buy down the interest rate from 6% to 5.5% for maybe around $2,500. When we execute a permanent buy down, that means the mortgage rate is lower for the entire duration of the loan. So if the loan is a 30-year fixed rate mortgage and if the rate has been bought down to 5.5%, then the buyer enjoys a 5.5% interest rate for the entire 30 years until they sell or refinance or pay off early. The advantage to the buyer is the lower payment. Yes, it costs them money to obtain the lower payment, but if they plan on staying in the home long term, it could save them thousands in interest. As a seller, offering to buy down the interest rate for the buyer can be a great negotiation tool. Rather than lowering the listing price of the house by, say, $5,000, they could offer a buy down to the buyer of up to $5,000 or whatever amount that they choose. The permanent buy downs can be a wonderful tool to use in a fluctuating rate atmosphere. As a mortgage lender, I always show the buyers the option of a buy down, and then I amortize the loan out over 5, even 10 years, so they can see not only the monthly savings, but also the savings over the next 5 to 10 years. On the next video, we will discuss temporary buy downs. I hope you follow along.